Meanwhile, on the show, Avinash, good afternoon. We had you on a scratchy line. Talk to us about the conversations you're having with your clients regarding insurance stocks. We are witnessing a lot of liking by the institutional side for insurance as a space. Tell us the queries your clients are posing about this sector.
Yeah, hi. Good afternoon. Yes, insurance, whether it's life or even general, if you look at the private names, have been the flavor of this year so far. And it has got two parts to the story. One part is, of course, barring the last couple of months, some slowdown, you have seen sort of a pretty strong and robust growth in the top line. At the same time, this growth has been coming with improving product profile. So basically, you are seeing a story where all the good names are in a way marching on the profitable growth part. Growth is doing well and profit is improving. Even in some names, if you are seeing some sort of a challenge at the growth end, but then their product profile is improving. So, of course, so that is where, operationally and financially, they have been on the right track. So that's particular to the sector. What has been helping them amid all these glooms and sort of a negativity around the lenders, just not the NBFC, HFCs of late, it has got even into some banking names. So that is where, when there is so much negativity around these lenders, that has sort of, in a way, also supported the insurance story that these are sort of being considered as a space to hide. And, of course, there is a secular medium to long-term growth story there. Of course, all the macro factors are in sort of supporting this growth. So that turmoil in that lending space had and underlying a strong performance of the insurance space. These two factors together, of course, has helped. And then also with regards to some of the names you have, because the promoters have diluted a stake to meet the minimum public shareholding requirement. So you have a larger float as well. And now the market cap has reached a stage where eventual inclusion in some of the local and global indices is something that one would look forward to. So there, of course, there will be some passive flows there as well. So all these factors put together, the insurance stocks have been doing, outperforming the market massively.
Avinash, in your view, over the next 2-year period, which of the top 2 or 3 companies have the strongest profitability outlook?
If you were to, in contrast to what happens in your the banking or the overall lending space, if you were to look in the life insurance space or even on the general insurance side, some of the private names, the top private names, the profitability profile is just slightly different. So if you were to compare and contrast, the top life insurers like SBI Life, SDFC Life, iPro Life, and even Max Life, if you just look on what kind of operating return on embedded value they are generating, the range will be a tight, it's a range-bound thing. So, underlying operating return on embedded value would sort of move in the range of, say, 17-18% to 22%. Of course, SDFC Life, in terms of return generation, is having the best profile thanks to its product portfolio that is a lot to other profitable protection products and some of the non-par guaranteed saving products. But that helps it generate the strongest return. And of course, if you today look at the valuation multiple, it trades at a meaningful premium to the peers. So on a relative basis, profitability of SDFC Life is superior. But if you were to just look at overall basket, profitability is very, very in the tight range. 18% to 21-22% operating return on embedded value is the range where all these players are operating currently.
We'll let you go. Thanks so much for your time chatting about insurance stocks which are buzzing away in trade as far as a couple of days are concerned.